We're continuing with our coverage from the IPIMI conference here in Phoenix, Arizona. I'm joined now by Phil Newman. He's no stranger to the industry. He's now with Metals Focus, a precious metals consultancy. Phil, thanks so much for being with us.
Pleasure to be here, Daniela.
So before we start, Phil, tell us a little bit about your new venture.
Well, Metals Focus has been up and running since the first quarter of this year. The team is already 7 strong. We're based out of London, but for example, we have an analyst in Mumbai, and we're focusing on gold, silver, platinum, and palladium. And importantly, it's not desk-based research. We're in the field, visiting the supply chains in all of the key markets.
All right, Phil. So I know you sat on a silver panel for the IPMI. So let's talk silver prices a second. Are you bullish or bearish on the metal?
I think it depends on your time horizon. So I think for the short term, we're a little bit bullish. We think prices can recover by the back end of this year, and that recovery may carry on into early 2014. But then we think from that point, prices will start to weaken materially.
For how long is that downward trend?
That's very difficult to call. I would say that the bull market we've had for the past 10 years, I think that is going to be essentially behind us now. And we will be into a very strong, perhaps bear market. So prices potentially could weaken for a good few years.
Okay, so when you say weaker, what range are you looking at?
Well, I think as I said, for this year, for average, you say around 24 for the calendar year.
Okay.
For next year, for 2014, you could have an average for the full year of around, say, $20, maybe a little bit over that.
Okay.
And then I think there is still the potential for prices to weaken going forward. So you could see prices then falling below $20 in 2015 and 2016 potentially.
So Phil, does that sentiment cross over into gold for you?
Absolutely. I think you can, for the back end of this year, that one of the reasons that silver is likely to do a little bit better is because gold should improve as well. But then again, for next year, we do see prices, I think, start to weaken quite materially as we see more of an investor sell-off. And I think that's absolutely key to both markets.
So would you say the investor sell-off will be the number one factor weighing on gold, or are there other fundamentals you're looking at, for example, the recovery in the U.S.?
I think a key factor is if you start to see the recovery in the US and investors start to think about the potential for QE to start tapering off in the United States and perhaps elsewhere, then professional investors, which I think is a key category, absolutely, that we'll start to see more liquidations, more selling from those categories of investors, and that is likely to outweigh some of the very strong support we think will emerge from some of the key price-sensitive markets.
Okay. So that said, what advice would you be giving an investor? Should they be taking advantage of these lower prices, or is it a wait and hold period?
Well, unfortunately for Metals Focus, we don't have that sort of category to advise investors, but I think if you look at the whole market, we are still seeing, I think, quite strong demand from retail investors. But I think it's really all about, in terms of price action in the short to medium term, it's very much about what the professional investors will be doing. And I think we are seeing, quite a negative sentiment from them becoming quite entrenched.
Excellent, Phil. Thanks so much for chatting with us today.
Pleasure to be here. Thanks, Daniela.
And good luck on your new venture. And thank you for watching this edition of Kitco News. You can email us at newsfeedback@kitco.com or follow this conversation on Twitter at Daniela Camboni. Thanks for watching.